So let's go into a couple examples. If you're a Clover, you hear me talk about it all the time. It is my most profitable pattern. It is the pattern that got me profitable in the first place, specifically in the OTC markets. And we're gonna talk about the reasons why I picked it initially and why it stuck with me so long. Hey everybody, welcome back to the Clover Trading YouTube channel. My name is Don Mastromatteo, and today we're going to be diving deep into the world of trading patterns. By the end of this video, you'll have a solid foundation in recognizing and leveraging whatever patterns you choose to trade to make informed trading decisions. So grab your notebooks, buckle up, and let's dive into the fascinating world of mastering trading patterns together. So what is a trading pattern or a chart pattern that you hear so many people talk about? For me, a chart pattern or trading pattern really is just a blueprint for market behavior. It's really just taking what you've seen play out hundreds and hundreds and hundreds of times, find moments before the big move happened, and take a snapshot of that. When I see this, there's a good percentage of time that this specific outcome takes place. It's just reason to buy or sell. A chart pattern to me is really, it's what makes me a trader. I am a technical based trader. I don't care too much about the fundamentals or the catalyst. I am aware of them and I pay attention to them, but the chart pattern is everything to me. It's what allows me to either take a trade or say that there's nothing there. Not having a chart pattern is probably one of the biggest reasons most people fail when it comes to trading, because they either are implementing too many trading patterns and they're looking at way too many stocks and way too many charts over the course of any day, week, or month. Chart patterns really are what make the trader. And actually figuring out which patterns work for you is a process that I think needs to take place relatively early on in your trading journey. I think once you've gone through the steps of learning all the vernacular, going through either beginner courses like Clover Academy over on clovertrading.io, places where everything is prepackaged in a way where you can learn all the important vocabulary, learn trader talk. Once you've gone through that basic prerequisites to learning how to become a trader, I think finding a pattern is so important. Chart patterns to me, I think, are the really reason you either become profitable or not, because it's such an easy way for you to become consistent from the very beginning. When I first started and I spent the first 6 to 10 months unprofitable, a lot of that was just, spinning my wheels, not going anywhere, because I wasn't actually trading patterns that I understood all the criteria for, understood how it was supposed to play out, understanding what I was supposed to expect from that. So that way I have good potential price targets and profit targets and know where it's supposed to go on what time frame. These are all things that you understand through studying it from someone else first and then interpreting into your own words, into your own time frames, into your own trading psychology to make it profitable for you. At the end of the day, that's the only goal that we are trying to accomplish, is to make money trading, not to have a good time, not to trade the entire market from start to finish and be pushing buttons the entire time, which I think is a huge mistake that so many beginners make. And they think that's what that day trading really is, that we're supposed to be clicking buttons all the time. But there is no shame in just becoming a master of one pattern and experimenting with it. Once I've kind of made my decision on which pattern or patterns that I really want to focus on in the beginning, there's some key questions that I really want to go over, and the most important thing really is criteria. Is there something that sets this pattern apart from every other pattern that I could write down on paper, go, this chart needs to have these 5 things on it, or it's not this pattern, whatever it is, a breakout, a breakdown, a first green day, a first red day? Because I think that is a great place to start. And when we look at some charts here in a minute, that is the most important differentiating factor when it comes to, is this a track-worthy pattern or not? Do I have a list of criteria that must be met for me to actually click, you even have the ability to click the buy or the sell button on the stock? So many people, especially in the beginning, they don't understand the criteria, or they don't have any criteria for that pattern. And if there's no criteria for it, then it just isn't a pattern.
Ever dreamed of trading like one of the Clovers? Well, it all starts with the right broker. Clover Trading and Centerpoint Securities have teamed up to supercharge your trading experience. By joining Unlock the Power of CP Edge exclusively with Centerpoint, we're talking top-tier trading tools worth over $6,000, all at your fingertips. Get ahead with real-time scanners, cutting-edge news, and a tailor-made trading journal. Experience trading like never before with superior short inventory, personalized support, and interest on your idle funds. Plus, you can get competitive pricing that fits your trading style. Ready to elevate your trading game? Click the Clover Trading link in the description below to get exclusive deals with Centerpoint Securities. Now let's get back to the content.
So let's go into a couple examples. We're going to talk about the multi-day breakout setup. For me, you've probably seen it in previous examples. If you're a Clover, you hear me talk about it all the time. It is my most profitable pattern. It is the pattern that got me profitable in the first place, specifically in the OTC markets. And we're going to talk about the reasons why I picked it initially and why it stuck with me so long. This pattern for me has stuck out for a number of different reasons and has stood the test of time. So when I picked it at the beginning, and why I think you should pick patterns, is that they really do make sense to you. Why did multi-day breakouts make sense to me? The biggest one was I'm not a fast-paced, twitchy type of gamer, reactionary type of trader where I can just read price action for 5 minutes and make a decision on what I think the stock's gonna do in the next 5 minutes or the next day. I don't like reacting very quickly, because what I realized was that that was not enough time and not enough support and resistance and not enough of the chart playing out for me to actually make predictable and profitable decisions on what direction the stock is going to go in. So I needed some sort of pattern that took more time to develop. I wanted to be less reactionary. I really wanted to focus a lot less on stocks that were gapping up on day one, that just got the catalyst, just got the news, have the 100 million shares going off in pre-market. I want to avoid those because that's where all my negative habits come out, and that's where I have the least amount of edge. And I want to focus on some sort of pattern that multiple days has to take place before I ever click a button, so I know exactly where resistance is, know exactly where support is, know exactly the time frame I want to trade on, either an intraday or a multi-day type of swing trade. And multi-day breakout made a lot of sense to me because it fit who I was, what I was looking for as a trader, and it fit my strengths. It also fit a weakness of mine, which is to overtrade, to continue to click a button if I have an overall thesis or hypothesis or an idea. You know, especially the short side, you've seen me make a lot of mistakes in this area because I just continually go back and fight and fight and fight. With the multi-day breakout setup, it was very easy to me because there was a very, very specific death line that if the stock broke below, it was done, and I wanted no part of it going forward. So when I was wrong, I lost one time, and when I was right, I was making multiples of it because of some of the ways that the risk reward was setting up and developing for me, and it made its way into a very easy to manage, easy to get the meat of the move and still make maximum risk reward, take one loss when I'm wrong, wait for the development over the course of days or weeks. And it was a really easy trade for me to see coming, actually execute on, create the right trade plan for, and profit big over time. All my biggest trades my entire career have been on this strategy because A, I'm a long bias trader, it's easy to manage risk, and I know exactly what I want from every specific example because I've seen thousands of these play out over the course of my 8 to 9 year career. And if you look at the first example here, AGBA, which is a play from 2024, you know, we talked a bit about earlier about you need to know. So the first step we just talked about has to fit you, has to make sense to you, has to fit your strengths and your weaknesses, and you have to be able to make money doing it. And if you're studying some DVD or some guide or some video lesson out there and they're giving you 5 patterns to choose from, that's the first place I start. For me, multi-day breakouts, the list of criteria is really simple and it's black and white, right? Stock go on a run, stock on increased volume, increased attention. There's clearly, you look at this chart right here, stock goes in gaps from 39 cents and goes to $1.65. Volume here clearly increased over what it regularly does on the daily chart. There's not a lot of people watching this. There's no catalyst, nothing going on. And then all of a sudden, boom, the stock goes on a big run, on big volume. Their eyes, there's attention there. So that's the first bit of criteria. Then the next bit, it's very black and white again. The stock then needs to set a top, finish that run, and spend at least one day, red or green, without breaking that high. This was a 2-day run, a 3-day run, whatever it was. The day that it tops out and spends at least one day without breaking that high, boom, I can draw a line there now and go, that is my breakout level. Again, very black and white criteria. And then it's as simple as the time that it breaks that high over the course of, 3 to 5 days. Relatively speaking, multi-day for me means in the shorter term. The longer than that then becomes multi-week, multi-month breakouts. But a multi-day breakout sets up over the course of multiple days, and when it breaks out over that level. So the criteria is very, very simple for me to understand. That's why I really like first red days as well, because I have to wait, see the stock develop, and then I come in when all the pieces are already there. A lot of the patterns on day one or on day one gappers are very difficult because you have to be very good at reading price action, very good at reading tape in level 2, have a good understanding of the catalyst. That is not my strength. And I can't quantify or qualify every single pattern that I see that happens on day one as an overarching pattern. This is very trackable to me because if the stock doesn't do those things, it is not a breakout and it is a no pattern trade for me. So that's another reason why I was able to pick this pattern and made so much sense to me at the beginning, was because the criteria for this trade to take place is not up for debate. What could be up for debate is there too much resistance behind it? Is the volume not good enough? Is the volume drifting off on the consolidation days, so maybe it's just not that enticing anymore? But if you say XYZ stock is a breakout and I look at it, there is no debating it is or it isn't, and I will look at that and make the decision based off the criteria for this pattern. So does your pattern that you want to trade going forward have specific criteria that you can look back on and go, this was definitely this pattern, that's why I took the trade, and that's why I'm able to track it with ease on my data set? And then the next, we can look at different examples as well, just so you can see the multi-day breakout level set up. If I'm looking at this area right here, increased volume, stock goes on a run from the 12 cent area into the 20s, sets a high. The next day, it is unable to break that high. Boom, we now have a breakout level over this 21.5 area. We break out of it the next day and go higher. OPTT, and notice that just happened over the past week or so. Stock goes on a move on increased volume, 13 cents to 27, spends at least one day, in this case way lower than that breakout level of 27, but it doesn't break that high the next day, so boom, we have a breakout level. This doesn't mean that I'm buying every stock that sets a high. It means when they go and they look like they're going to break out again over that level, that's when I get interested, and that's the level that means the most to me. In this case, boom, we put a line there, 27, it sets up for 3 more days before breaking out and going higher. And so when you hear me say the words multi-day breakout, I am very specifically talking about something very specific, but the criteria needs to be met for it to quantify or qualify as a multi-day breakout. And then the next place I go, if I'm a beginner and I pull this pattern from someone else. At the beginning, the first time I ever saw this pattern was from Tim Grittani in Trading Tickers 1. And then I look at the pattern, I start to identify it, then I start to break the pattern down piece by piece. Where are the best entries? Where are the best exits? How can I come up with an exit strategy? What is this pattern? Is this a win rate pattern where I can expect to win 60% of the time and I'm just looking to make 1.5 or 2 to 1 R over the period of time and let it pay me through time? Or is this a pattern in which I'm going to have a lower win rate, but I have the potential to make 10 or 20 or 30 to 1 risk reward? That was the case for me on multi-day breakouts. I want to break this pattern down 100 different ways. I want to pull up every example in which this took place over the past 5 or 10 years and study what happened before the actual breakout day. What was the price action like? What was the volume like? What were the catalysts like? What was the price ranges? I want to break down everything. And this is when I spend, 6 months to 12 months on one pattern. I want to become an expert on that pattern. I want to break it down completely, understand every nuance, every reason that might give me a bigger edge, a better risk reward, and the ability to maximize that trade. And, whether it fits into a specific sector, whether there's a certain theme that's going on, certain volume that makes it more A+ than another one, whatever it is, I want to break all that down so that way I can become an expert on the multi-day breakout. So that way, as I gain more experience and knowledge on it, I can start scaling up my abilities, scaling up my size, and making more money on it. And as long as that pattern is still there, I can build an entire career on one pattern because I've taken it from someone else, not reinvented the wheel, and finding a way to make it my own. All the best traders you see started out with someone else's idea, made it into their own based on their own skill set, and became an expert at it. So that way, not only do they just become an expert at it, but it's also top priority for them every single day and every single week, so they're not missing opportunities. So those are some of the important things that it comes from transitioning from beginner to someone who can take a pattern, make it their own, and become profitable at it. And that is the process. If I were to take multi-day breakouts and study it, trade it the way Grittani's saying it, trading it my way, whatever, and I never can seem to get it profitable over a 2, 3, 4 month stretch, and it's just not working, I take the same process and I apply it to the next pattern until something works, it makes sense for me, and I can actually execute on it time in and time again. And that is the process. That is, from what a trading pattern is to why it is so important to how to do it yourself. And then some examples of what it means to me and how I see it play out from me being a beginner to being a consistently profitable trader years and years down the line, trading the same pattern, and how it all starts in the beginning.